The euro and the British pound lost value on Tuesday, paring early gains. Yesterday's data on Germany's unemployment rate was in line with forecast. However, the number of people out of work in Germany rose sharply, well above the consensus estimate, which weighed heavily on the euro. The job openings and labor turnover survey from the United States turned out to be weak, putting some pressure on the greenback. These, in turn, helped the risky assets enter a bullish correction. Today's macroeconomic calendar is full of final reports on services activity in the euro area and its member states, including Spain, Italy, France, and Germany. In addition, these reports will contain composite PMIs. Given that services sector activity in the euro area and the UK is broadly in good shape, stronger indicators could support the euro and the British pound. If data is disappointing, the risky assets will come under pressure. After all, manufacturing activity continues to shrink at a rapid rate, which is hurting the European economy. Therefore, in case of weak services activity indicators, do not expect the euro and the pound sterling to rally in the near future. Traders may also take notice of data on Eurozone producer prices, which are estimated to have decreased by 0.5% in April. Speaking of US statistics, it's worth focusing on the ISM Services PMI. Notably, recent data on US manufacturing activity was downbeat, which led to a weaker dollar and a steep rise in the risky assets. If activity in the US services sector deteriorates for a second consecutive month, the greenback will plunge, with the euro and the British pound gaining strong upside momentum. However, recall that the ECB meeting is scheduled for tomorrow, which is likely to limit today's trading activity. Alternatively, if US data comes in better than expected, demand for the dollar is likely to increase further. Furthermore, the ADP National Employment Report is due out today. US private payrolls are expected to decline slightly, which may also drag the dollar down. Now let's move on technical analysis. According to the 1-hour EUR USD chart, a false breakout at the resistance level of 1.0887 will generate a sell signal, pushing the euro down to 1.0861. If the price breaks below this level and tests it for the bottom up amid strong US economic data, the European currency will face a sell-off, diving to 1.0838 and 0813. At the level of 1.0813, I recommend going long on rebound to catch an intraday correction of 20-25 pips. Long positions at 1.0861 and 0838 can be considered on the false breakout. In a bull case scenario, if the price breaks above 0887, a buy signal will be generated. In this case, the euro will climb to 1.0915. Its breakout will open the way to 1.0941, where it would be wise to go short on the rebound, expecting a 25-30 pip move. Going short at 1.0915 and 1.0887 will only be relevant in case of a false breakout. As for the British pound, the situation is similar. A false breakout at 1.2779 will generate a sell signal at drag sterling down to 1.2746. If the price breaks through and fixes below this level, the volume of short positions will increase further, with the British currency sliding to 1.2721 and probably 26.95. In this area, traders are advised to go long on a rebound, counting on an intraday correction of 20-25 pips. Long positions at 1.2746 can only be opened on a false breakout. Alternatively, if the price breaks through and consolidates above 1.2779, a strong buy signal will be generated. Supported by strong data on services activity in the euro area, sterling will most likely rise to the 1.2810 level. Its breakout will pave the way for a rally to a new one-month high. At around 1.2853, it would be a wise decision to go short on a rebound, expecting a 30-35 pip move. Going short at 1.2810 and 27.79 will only be relevant after a false breakout. Best of luck.